Most people think you need a lot of money to buy real estate. You don't. In fact, a lot of investors who are really savvy know how to use zero of their own money, and they just get money from lenders. And no, I'm not talking about a bank, I'm just talking about regular people with money, people you might know in your own personal circles. And this is how investors like myself pitch to these people. Also, in this video, I'm going to explain a couple concepts. Number one, what is private money to a larger degree? Number two, when do we use it? Number three, when should we not use it? And number four, how to actually present it to potential investors. Hi, I'm Skylar. I'm a real estate investor. I've been investing in Louisville, Kentucky for many years now. I'm involved with a local group of other like-minded investors, and I'm here to share what I've learned with you. By the way, this video is for entertainment purposes only, not financial advice. You should always talk to a professional. Let's get started. Okay, so not only will I explain these concepts to you, but I'm going to show you using this pitch deck I made on Canva. So without further ado, all right, and we are back. Can you see my face enough? Am I too small? Am I too big? I'm probably fine. All right, so what are we looking at here? This is something that I made on Canva, and I think it's really important for you to make something of your own flavor, if you will. I wouldn't copy exactly what I did because a lot of my stuff is geared towards people in Kentucky. So, there's like an emotional appeal that I'm local. I'm a small business, just like them or whoever. I'm the next door neighbor. Like that's my angle. All right. So I have this pitch deck, Private Money Lending, Subscribe LLC, and then some contact info that you can also embed a link on. So let's go to the next page. Private money lending. What is it? Or simply, private money is a term used to describe a loan that is given to an individual or a company by a private organization or even a wealthy individual. The organization or the individual is known as a private money lender, and I got this from a website called Corporate Finance Institute, and you can click on that link and it'll take you to the website. So private money means people, friends, family, people you know that you trust, that's who we're gonna typically get the private money from. So company vision. Why would we do this? Well, as you may already know, most banks will at most lend out a mortgage up to 80%. My phone went off. Most banks will lend out a mortgage up to 80% of the ARV, the after repair value of a home. Because of this, the remaining 20% is required by the buyer. This poses a challenge to the buyer/investor because eventually the investor will run out of money. Go figure. Should they like to continue doing deals? So by essentially crowdfunding the remaining 20%, we're able to acquire the property. Additionally, this allows the investors access to new areas of the market, and that's where you come in. So I'm obviously speaking to the person I'd be presenting this to. Also, if you notice, this is from Louisville, Kentucky. So a lot of my photos, again, are from Louisville. So the bank, they lend out 80%. For easy math, I did a 100K house. Wouldn't that be nice? 80%, and then, the private money guys are putting in 20. Bada bing, bada boom, we bought the house. All right, so your loan options. And now, this is not a hard line rule. You can mix and match and add whatever flavor makes sense to you. Originally, someone told me they do 12% simple interest for a year, and that's their loan term. I decided I was going to add a couple more loan terms because the math makes sense for both parties. So let's get into that. Option number A, which is the short-term loan. This is really good if you're doing a flip or if you plan on getting hard money and you plan on refinancing with a DSCR loan almost immediately. So I've got a 3-month contract, and that pays 10% of the original loan amount at the end of the 3 months, which means, and also the principal. So if someone gives me $1,000, I'm going to give them $1,100 in 3 months. That's my agreement. Something I forgot to mention when I was making that video was that I make a personal promissory note with whoever I'm working with, and then we get it notarized, and then I create a copy, and then I send it to them. So that's something else I do. I didn't include that in the video. I forgot to do that, so I'm saying it now. Option B, which is the flexible loan, we have APY interest payment only that is paid back monthly until the company pays them back. Meaning, the length of loan is flexible. Obviously, I don't want to hold this more than a year because a 15% rate loan is kind of high. I might as well just pull out a private loan at that point. But obviously, there's credit checks and all those other things. So this one's a good one if you're kind of doing a loan that's larger than 3 months, but maybe less than 12 months, and it's paid back at our leisure, and we only do interest payments until we just pay off the balloon, as they call it, the big lump sum at the end. And then I have option C, which is the one I told you. It's a fixed 1-year loan, 12%, simple interest. Again, you can make these however you want. You could say my loan is 5%. I know some people who say, actually, I only give out 10% loans. Whatever makes sense for you. All right. And then I've, included some nice things. Obviously Kentucky's kind of bourbon capital of the world, so I included some of that stuff. Subscribe LLC is a multi-member LLC. That's me and my bros. It's not actually our LLC, by the way. I just, put that in there. All right, option B and C explained, like I just said. So I'm going to keep going, but I'll move my face just in case you want to take a photo or something. There you go. All right. Again, more horse stuff. How does it compare? And I thought it would be nice if I was honest to the people who I'm getting my lending from that, hey, this is how your loan compares to other deals you could make outside of us. So, a traditional savings account is going to yield you 0.45%. A high yield savings account, which isn't always liquid, which means you can't always pull your money out when you want. That's 5%. The average growth of the S&P 500 is about 10.5%. That's according to Business Insider. Don't come after me. I know recently it's been more like 12 to 18 the last 6 years, but whatever. And then the average year-over-year growth of Bitcoin is about 63.6, and that's from Curvo, where I got that from. And the problem with Bitcoin, obviously, is that yes, the yield is higher, but the risk is also substantially higher. So if they're already in crypto, or maybe they want something safer, but they want better than the S&P, and real estate is tried and true, so, real estate's a good middle ground between the two. And then I also show our deal, which I'll move my face again. I've got our deal, which is at least 12%, 15%, and the 40% obviously is from the 3-month because, 10% over 3 months, 12 months, that's 40%. Do the math. All right. And I'm going to move me back. There we go. So for clarity, this loan is rather expensive for us considering it lowers our initial cash flow at the beginning. And the loan is more expensive than maybe what a bank would give me, especially if I'm going conventional. It's going to be like 6, 7, 8%. This does allow us to acquire property where we otherwise would not have been able to acquire the property. So with that in mind, we don't want to hold on to these loans super long. If you want to, again, that's your own prerogative. Our business, we try not to hold on to them so long. I like not being indebted to so many people. And basically the way that this engine works is cash is given from the private money to the Subscribe LLC. And then we, take that money and then put it into the rental. And then we take some equity out, or, we take equity out. That's the better way of saying it. And then we pay our private money guys so they can, in turn, do the next deal. I include this as well. It's kind of cheesy, but I think it's nice. Coming together is a beginning, keeping together is progress. Working together is success, Edward Everett Hale. And then contact us. Obviously, I'm not showing you all my private data. If you want me to help you with stuff, send me a message down below, and I will talk about other ways that I can help you guys. There's another horse. And that's pretty much it. You're welcome to copy any of the strategies that I use to buy houses. There's obviously other ways of doing it. Some ways is going creative, which is a video we can talk about later. The other way is pulling equity out of a previous property that you own and buying new ones. And then another way would be finding a home that needs a lot of work, so you go ahead and get a hard money loan and some of your own money, and then you use that to buy the property and then refinance, pull equity out, blah, blah, blah. That's going to be a later video. Takes way too much time to do it in this one. If you've been watching the series so far, at this point, I think it's time to talk about how to handle tenants. I think that's the next thing. We've talked about looking at properties. We've talked about how to find deals. We've talked about a lot of things. The pitch deck. The next thing that we'll talk about, I think it's really important, is we should talk about tenants, the do's and don'ts. Yeah. Give me a follow. If you would like to see more of that, like I said, I'm going to continue this entire series until we've basically restarted the cycle. And at that point, I think what would be a really fun exercise, which I hasn't gone through my head until I got a comment from my last video, but I think it'd be a really cool exercise to kind of run deals in different areas of the United States. So it's like someone gives me a comment, hey, what would you do in Seattle, Washington? Or what would you do in Washington, D.C.? Or Houston, Texas? And I'd be like, all right, let's go look on Zillow and then run a deal and show you a video that way. So stay tuned for that. That might be coming up. See y'all. One more thing, I forgot to mention it in the video, but it's very important we talk about this. When should you not use other people's money to buy deals? If you've never done this before, or you still feel very inexperienced, and you don't want people to be pissed at you if it blows up, don't do this. You've been warned. Again, not financial advice. Don't come after me. But, and if I was a person who I wanted to invest money in someone else, and they said they've never done this before, and they were asking for loans on top of the loans that they're getting for the house, I would say no. So be good at your job first. Thank you.